Hi everyone, welcome back to Padhai Logic. Today we'll discuss Unit 3 of e-commerce. So if Unit 2 was about building beautiful storefront, Unit 3 is where we actually install the vault as per digital payment system. So Unit 3 is all about payment systems, and in this we'll discuss about payment gateways, peer-to-peer payment system, and how is the electronic fund transfer working in e-commerce. So what is the essence that EFT plays? And then we'll discuss about virtual currency, digital token based EPS as well. There would be more discussion about some major financial institutions and e-transition challenges, and what are the different types of e-payment system with their advantages and disadvantages. So let's get to it. Let's start with a foundational definition that you must write down. That is, in context of e-commerce, electronic payment system is a functional layer. Functional layer that does what? It facilitates the exchange of value over the internet. Alright, it is all about digital payment system. So it is more faster, more secure, and globally accessible. Anyone can access it throughout the world. And then you see, if we have an overview of electronic payment system, it is handled digitally between the buyer and the seller, and it is mediated by a financial institution, or we can say a third party processor, which is usually known as payment gateway. Alright, so when you click on pay now on the site, like our case study we talked about Electro Hub. So when you click on pay now, you set off a complex chain reaction involving 5 major components. Okay, 5 major components which we will talk about right now. So first is the consumer, or we can say customer. So customer, what it does is the buyer or the customer initiates the transaction. On what? On the merchant. Merchant is the online storefront. For example, you're buying something from Electro Hub. So you are the customer and you initiated the transaction. And then there is issuing bank. So issuing bank is the bank where the cash lives on the customer's side. Okay. So issuing bank is the customer's bank, and there is acquiring bank. And acquiring bank is the merchant's bank, where the cash lands from the customer to the merchant, right? And you see there is a payment gateway in between. This payment gateway secures that there is the transaction is completed without any failure, without any attack from the cyber, or and it also bridge the links between everything. So you see, customer, it submits the order to an online store, and it contacts the payment gateway when transaction is initiated, and it confirms the payment from the issuing bank. So once the issuing bank confirms that there is enough amount to pay this transaction, it confirms and send the response to the payment gateway, and all this payment is paid out to the merchant's bank. And then the response is sent to the online store, and the customer receives the response that your payment is done, your order is confirmed. Alright, that is how electronic payment system works. So this brings us to a massive past year question, that what is an EFT and how does it work? So EFT, electronic fund transfer, it is an overarching technical engine behind all the e-commerce settlements. Alright, it is defined as a movement. If it is an umbrella term, and it is defined as any movement of monetary value from one bank account to another that is initiated entirely through an electronic terminal, from electronic phone, from computer, or any kind of digital interface. So if there is any monetary value that is transferring, we regard that term as electronic fund transfer. Alright, so electronic payment system is part of this. So you see, to show the true technical depth on your answer sheet, you need to explain that EFT is split into 3 different core components. First is ACH. ACH stands for Automated Clearing House. So this handles all the low value, high volume transaction in massive batches. Okay. And it has think of it as an automated recurring subscription payment, like your monthly Netflix billing or your gym payment. So what is happening, these are very low value payment system, but since you are not the only one acquiring the monthly Netflix billing payment, right, there are millions of people, so it is performing those millions of transaction in massive batches. So this is the core component of EFT. Second is the wire transfer. So this is a real time high value financial settlement. In India, this maps to the system like RTGS, like real time gross settlement. It is heavily utilized in B2B e-commerce for bulk orders. And it when the corporations are buying large raw materials, for example, and need millions of dollars transferred instantly, then they use wire transfer. So this is the core component of EFT. Another is direct entry. So this is also known as pull authorization. Okay. And this is a specific protocol where a customer authorize a merchant to automatically pull the money straight from their saving account on a fixed schedule, that on this particular date the consumer can a merchant can automatically pull the money, right? This is the pull authorization, like we give it to the Netflix monthly cycle. So whenever that date comes of a month completion, Netflix automatically pulls that money through a bank, the specific amount of money, right? So this is how direct entry works. Next, we'll talk about detailed features of e-payment or EFT. What if the examiner asks what makes these digital transfer reliable and secure, then you must list these 6 core technical features. Okay, so let's break them down with simple examples. First is security and encryption. So the second your payment details leave your browser, all right, they are encrypted. That means they are converted into some kind of code which cannot be read by anyone or understood by anyone. What is that? Okay, and this is done using SSL or TLS. This is the secure socket layer protocol, which we'll discuss what is it later on. And this scrambles your 16 digit card number into an unreadable string of random characters. So what happens, that your card number is protected from the network stiffing attacks. If there is any kind of attack on the network while the transaction is happening, so this makes sure that there is end-to-end transfer, and there is no one can even understand what is happening. So the message, the card number is encrypted. This is the detailed first important feature of EFT. Second comes the PCI DSS compliance. So this stands for the Payment Card Industry Data Security Standard. It is a strict, mandatory global compliance checklist. It ensures that any e-commerce site handling credit card processes, transmits and store the data in a heavily fortified digital environment. What you mean by fortified? That it is protected at such a level that no amount of cyber attack can still overcome the fortification and get the data. All right, so this is the important feature. Next comes authentication, which we call multi-factor authentication. So to prove the person is spending the money is actually the account owner, we need to prove that, right, that the money which is coming is from the account owner. The system requires secondary verification layer. Like you see, there is an instant OTP system happening these days. So what is the OTP? This instant SMS OTP is an in-app push notification, right? Or there is a biometric fingerprint check, that to proceed with the payment, just put your fingerprint in or put a code in. So this is how multi-factor authentication works. Next up is settlement cycle. So here's a classic business insight. So when you buy something online, your money is deducted instantly, right? But the merchant doesn't get the cash immediately. The banking network processes the transaction, and it typically takes 1 to 3 business days, known as T1, T plus 2 or T+3 settlement, for the cash to clear into the merchant's actual bank account, right? And then the another feature is transaction log and reporting. So every digital transfer creates a digital trail. All right. It creates a permanent, unalterable digital trail. This transaction log plugs directly into the platform's e-business backend and make it incredibly easy to track the daily revenue and handle customer refunds. Also simplify the accounting. That is why it is very important feature to have in transaction log and reporting. Let's look at the one of the most highly requested process question that explain end-to-end working of an electronic fund transfer in e-commerce. I have already discussed the components of EFT and how they workflow, but right now let's just have this process overview in detail. So, for example, a customer named Rahul is buying a premium smartphone from Electro Hub for, let's say, $500. So we'll walk through these 5 exact stage of life cycle of how the payment will occur. So the very first stage is transaction initiation. So this is the client side. Rahul lands on a secured checkout page, selects the credit card, for example, and input his name. Then he inputs the 16-digit card number, expiry date, CVV, and then he hits the place order button. This is the very first stage where what happens, the customer complete the checkout phase, and like I said, we provide the payment details which the Rahul did. Now comes the second stage, in which the moment Rahul clicks the button, Electro Hub server immediately takes the sensitive data payload, okay, and wrap it up in an uncrackable SLS shield, means it encrypts it, and then fire it across the web to our integrated payment gateway. So for example, there can be payment gateway Razor Pay, all right, and this gateway act as a secure digital truck that takes that message to the required place. This is how data encryption and gateway transmission works. So what is happening over here, we send the transmission data to payment gateway. Data is encrypted using SSL or TLS protocol, and the gateway act as a bridge between the website and the financial actor. It is a truck that taking away this secure message from the website to the financial network. Then there is step 3, that is authorization. So the payment gateway acts as a translator, and it securely hands the transaction data to the acquiring bank, that is the Electro Hub's bank in our case, and it routes it through the card network like Visa or MasterCard, whatever, straight to the issuing bank. So what is happening over here? First, the request is sent to the acquiring bank, which then sends it to the issuing bank. Okay, so payment gateway send request to the acquiring bank, that is the bank over here of Electro Hub, and then it routes to the network card of the issuing bank, that is the Rahul's bank. This is how it is working. Then Rahul's bank evaluates the incoming request, check for the 2 critical things. First, authenticity. Did he clear his OTP check? If yes, then it checks the availability. Does Rahul actually have $500 in his account? If yes, then we go to the next stage, that is approval and deduction. So Rahul's bank approved the transaction, and it immediately fires an encrypted success code message back to the through the card network to the gateway. Alright, so there is an approval message is sent, and funds are immediately deducted from the customer's bank account, and it is held for settlement. and merchant website receives success notification. So we get that beautiful flash. The Rahul gets it, order confirmed on his screen. All right, and in our warehouse, what is happening? There is a shipping label print with a barcode that will be used by Rahul to track his order throughout the journey. All right, and then comes the settlement phase. This is the final move. So late that night, during the process called clearing, the bank settle their account in large batches. So the funds are transferred from Rahul's bank account directly to the ElectroHub's corporate merchant account. So this final loop is completed within 24 to 48 hours, which is known as T+2 settlement. And this closes the entire value of exchange loop. And this is the process of how EFT works in detail. I hope you got that. Let's immediately talk about what is the advantages and disadvantages of EFT. First of all, if we take in consider the feature speed, then the advantage is that there is instant deduction and faster order processing. So instantly you get that click of deduction of the amount from your bank account and the payment done, and the order would be received by you in the processing period of that particular website, right? But the disadvantage is that settlement to merchant account can take days. Like I told you, it might take 24 to 48 hours or longer than that as well. So this is where it lags, right? If we talk about global reach, it allows B2B, B2C sales across any border. But the difference is that exposure to currency exchange might cause fluctuations, which is on a bad end, right? And then we talk about efficiency. EFT helps to reduce the cost of handling physical checks, right? But the high transaction fees can lead to 2% to 3% from gateways. Okay, so this can be the transaction fees, which might cause losses from the end of merchant. And then if we talk about security, there is advanced encryption and fraud detection, right? But there is also risk of data breaches or phishing attack, which can lead to serious problems. Now we look at this classic table format question that examiners use to test your fundamental understanding of plastic money. So we'll compare smart card, debit card and credit card. So the core trick of remembering the debit card is the phase of pay now. Alright, this is the phase you need to remember, pay now. So when you swipe a debit card, you are using your own hard earned cash that is already sitting inside your current saving account, right? Current or saving account. So if your account balance is zero, the transaction is instantly declined. You cannot pay, it cannot, have any other option. And the second is credit card. The core trick to remember the credit card is the phase of pay later. So when you use a credit card, you are not touching your personal bank account. You are drawing down a line of credit, essentially taking a micro loan from a bank, right? Up to a pre-approved limit, that up to 1 lakh you can take loan in a month. So if you don't pay the bank back at the end of the month, they charge you incredibly high interest rate. So it is very important that you take that loan only when you have decent amount of money already with you to pay timely. And the core trick to remember smart card is how structurally unique smart card is. So it doesn't rely on traditional data hosting method. So it features an embedded microprocessor integrated chip, you see, and it is built right into its plastic body that can store over 100 times more data than any magnetic strip. So this chip allows the offline processing. So what happens is, I'll give you one example. Think about walking through a metro station. Okay, so when you walk through that entry gate where you have to put your card to a scanner, you have to tap your card. You see there is a massive crowd that back up instantly. So if you take a card which have a central banking server like credit card or debit card, what will happen? You put the card, it will take the transaction to the server, it will check if you have money or not. If you have money, the bank approved, then you get the approval. It might take a lot of time, right? But instead you tap a smart card, like you use metro card. So the gate sensor communicate directly with the card internal microchip, and it handle the math. It detects the fair value from the chip internal memory offline, and it opens the gate in milliseconds. So this is how smart card works. Now we'll quickly discuss about the few features which are differentiated among these three cards. So first, the smart card is an embedded with microprocessor, like I told you, and debit card is linked directly to the user's bank account. But credit card is allowing user to borrow funds up to pre-approved limit. If we talk about financial logic, this is prepaid, or it is mostly known as data storage. Okay, and it is often used for specific purposes like sim, like loyalty, like transmit. And if you talk about pay now, it uses the money you already have in your savings account. And credit card use the financial logic of pay later, where you're taking a short-term loan from the bank. If we talk about data storage, smart card use integrated circuit chips, and debit card use magnetic strips, and now it is mostly used in EVM chip cards. Okay, and credit card is mostly also using magnetic strip, and now mostly EVM cards. If we talk about processing, smart card can perform offline processing as well, deducting the balance offline. It doesn't need to connect to any banking server. Whereas debit card, it requires online authentication with the bank servers to check the balance. Same goes for credit cards and debit card, that it requires the online authorization. If we talk about security, smart card has the highest level of security because chip is almost impossible to duplicate or skim. Whereas if we talk about debit card, the security is moderate. It is vulnerable to skimming only if the magnetic strip is used. And then if we talk about credit card, it is moderate to high. It includes fraud protection and chargeback right as well. So we can say there is security. Interest fees, there is no interest fee in smart card, and it is usually involved in one time purchase or reload fees. It might include the reload fees. Then debit card, there is no interest. You may have some manual maintenance fees by the bank, or there might be some ATM charges. Other than that, there is no interest, but there is high interest in credit card if you are not paying the bill in full or on time. And if we talk about internet use, the smart card, there is very limited use of internet, and it is it is used for physical access and identity more than the e-commerce. And if you talk about debit card, there is internet use extensively used for B2C e-commerce via payment gateway. And for credit card also, it is the primary instrument for global e-commerce and high value transactions. Since we have discussed about payment gateway a lot of time in this whole entire journey of e-commerce, you might have an idea that what payment gateway is. So it is a specialized software application acting as a secure bridge between the e-commerce storefront and the frontline banking network, and it authorizes and clean the digital financial transaction. All right, and think of it as an equivalent to point of sale terminal that you see at a local store cash counter. What happens over there? The primary goal of a point of sale terminal to let you actually secure the payment and take away your goods, right? So the primary goal of payment gateway is to securely capture the payment credential, instantly encrypt them, preserve them, so that there is data privacy, and route the data packet through the electronic fund transfer network for immediate institutional validation. And if we talk about the security, it ensures compliance with PCI DSS standard, like we talk about, as it is a major feature of EFT, and meaning that merchant does not have to store sensitive card data on their servers, and it protect them from network attacks. So let's break down the types of payment gateway. So very first is the hosted payment gateway. So when a user hits checkout on our electric store, for example Electro Hub, they are completely redirected away from our domain of Electro Hub to secure an external payment page which is hosted by the provider like PayPal or Razorpay. So once the payment clear, the user automatically what happens is automatically loop back to our store. So this huge advantage here is zero security liability for the merchant. For ElectroHub, it is not our headache. And the third party provider handles all the compliance bit. Then comes the self-hosted payment gateway. So this is on site. So the payment details are collected directly on the merchant checkout page. Okay, so whatever is happening, it is happening on the merchant checkout page. It is happening on ElectroHub website. But the data is safely transmitted to backend processor using secure background API calls like Shopify payment, Stripe. So these are used at the background and they make sure that the data is stored in the backend processor. So this provides a seamless distraction-free UI UX journey since the user never leaves your domain. So whatever is happening on your site only. Then comes the API or non-hosted gateway. So the merchant builds and control entire user interface from scratch in this type of payment gateway. So the customers input data directly into the custom platform field and the site communicate directly with the banking API. So this model demands an incredibly high security because it is forcing the merchant to maintain the comprehensive SSL certificate and strict compliance, because everything is happening from payment to every banking detail and communication to the network and banking API. All of that is happening on the merchant site. So it is very important that there is strict compliance maintained in this scenario. Let's move forward and discuss about the 8 foundational payment instruments. Few of these you might have already discussed, like we have discussed about the credit card, debit card, right, and smart card. So these are the payment methods. So credit card allows pay later. All right, the user borrows a small loan from the bank and then pays it later. Then we have debit card, which is directly linked to the user's account. We also have digital wallet. It is known as e-wallet as well. These are the specialized applications like Apple Pay, Google Pay, and that securely store multiple tokenized card profiles. And it enables, like, there is one click checkout. It is enabling us to pay anywhere, and it reduces friction. All right, so you're just simply paying it from your mobile phone and it just takes few seconds. We have UPI as well. So UPI is unified payment interface. So it is a mobile first real-time EFT network that enables instant peer-to-peer transaction, right? Or we can say peer to merchant fund transfer using a clean virtual payment address or QR code. We say, where is the QR code? You scan it and you are simply paying it. It is a very seamless method, and it removes the need of having any bank account number or routing codes of your card. Nothing is required in UPI, and it is widely used these days. Then we have net banking. So it redirects the buyer straight to their banking institutions, and secure terminal to authorize an immediate account transfer using personal corporate banking credentials. So here we require all the banking credentials which are important for a fund transfer, right? That is what we call net banking. Then we also have smart cards, as we have already discussed. These are plastic card embedded with integrated circuit microchips. So in e-commerce, these operate as closed loop platform card like a custom corporate gift card or a transit network card, like we talked about metro card, right? Then we also have a type of payment method which is known as cash on delivery, COD. So it is a physical offline fulfillment payment method which is used to bridge the digital trust gap which we have, that sometimes we pay and then we don't receive what we really wanted. So COD is for that level of trust, that first we see that we have received the right order and it is ours, and then you pay, right? So it allows users to pay cash only when the product physically arrives at their door. And then we have buy now pay later system. So this is a short-term financing network, like you see Afterpay. Ever heard of it? So it is a third-party financing partners that pays the merchant immediately while the consumer repays the partner in structured installments. So these are few 8 types of payment method. There are others as well. I would like that you research it yourself, that which are the other payment methods which you can write in your exam if this comes as a bigger higher marker exam question. Let's talk about highly valuable short note question which might frequently ask in your exams. So what is digital wallet and P2P, that is peer to peer payment? So digital wallet is basically a software application, right? So software application that is configured to store payment instruments. Okay, it is used to store metadata and digital currency value. And this digital currency value which is stored in digital wallet is then used to exchange the payments, right? To perform transactions online. So when this transaction happened directly between two individuals without requiring any commercial store setup, alright, it is classified as P2P, which is peer to peer payment system. So it is the direct transfer of fund between two individuals without complex commercial setup. So to demonstrate top tier industry knowledge, you have to write the 3 definite implementations of peer to peer and digital wallet. So first is Google Pay. So Google Pay is tokenized proxy model. So it uses near field communication. Okay, near field communication, NFC, for physical retail tapping and secure encrypted API for online. So what happens is there is a you see scanner. So you are scanning that scanner. So there is a near field communication. So your phone is scanning, your camera is using as a scanner to scan the barcode to grasp all the information that is inside that scanner, and then you pay to that particular person. Okay, so what is happening? Crucially, it relies on tokenization technology, that your actual 16-digit card number is never transmitted across the web. So when you are paying to the merchant, your account details are not shared to that particular person. Instead, it passes an encrypted virtual token proxy, right? When you share the money, you just have a other details, a UPI ID or something is passed, that token is passed to that particular person, but that person who you pay never gets your account details. That is a big plus of using such methods, right? Then you have Paytm. So Paytm, it launched as a classic semi-closed wallet system, digital wallet. It allows users to preload the money, preload and store the currency inside that digital account balance. And since it has scaled into an comprehensive financial ecosystem, it has integrated its own payment bank, dynamic QR code generation, and merchant checkout API as well. Alright, so now it is versatile. It also supports QR code scanning, bill payments, integration with third party e-commerce sites as well. Then you have UPI, which is the unified payment interface. It is an universal standard. It is developed by NPCI. It is developed by National Payment Corporation of India, and this is UPI is a real time instant payment architecture that allows users to link and manage multiple independent banks inside a single mobile application dashboard. So you have multiple bank accounts in your single dashboard. So by utilizing VPA that we talked about, virtual payment address, that is like name and then @bank, right? You see this kind of ID when you open your GPay or anything. So this is what happens, that it completely removes the need to share the sensitive account detail or IFSC codes, right? You just use this VPA, virtual payment address. So it is a masterpiece of opening banking infrastructure because it allows users on one app to instantly send money to the merchant using entirely different app, and this is happening seamlessly. So how we have digitalized all the things is quite impressive, right? So this was the P2P payment methods. Now let's explore an emerging technology, that is virtual currency or cryptocurrency. So cryptocurrency is a digital, or we can say it is a virtual asset secured by advanced cryptographic protocols, making it virtually impossible to double spend, right? And you see that unlike traditional banking networks, cryptocurrency run completely on decentralized networks, and these decentralized networks are powered by blockchain technology. Blockchain technology is an immutable distributed digital ledger that shares across an open network of computer. So let's discuss about the advantages of cryptocurrency. First is it uses decentralized network. That means it operates without no central authority. There is no bank. It is eliminating the single points of network failure and protecting the system from any failure, right? So if you see, when there is a bank, if something happens on a bank, so what happens? All the transactions are stopped, right? So this is what is happening in this cryptocurrency, that it is decentralized. There is no authority, there is no central authority which controls the currency. Then comes the low transaction fees. There is drastically lower transaction fees for cross border transactional value that is transferred by cutting out intermediary correspondent banks. So since there is no bank, so crypto is significantly cheaper than EFTs. All right, because in EFT there are multiple middlemen banks which are involved, and they reduce or they deduct the transaction fees. So this is completely low in this scenario. Then there is fast global settlement. You see, the bypasses traditional methods. What happens? It takes 1 to 3 days banking settlement cycle, like we talk about T+2 settlement, and then verify transaction globally. It takes a lot of time. So in the case of cryptocurrency, there is fast global settlement. What happens is that this 2 to 3 days settlement cycle is reduced. There is transaction globally 24/7, 365 days within minutes, right? That is the biggest example why cryptocurrency is widely adopted these days. But there are few disadvantages as well. If we talk about disadvantages, there is extreme high price volatility. So cryptocurrency can experience massive unpredictable fluctuation of price every single day. So this makes it risky for standard merchant to accept them as a predictable stable exchange of value. Then you see there is a regularity challenges. Many international governments have not yet established a clear legal framework for the digital assets, right? For creating ongoing compliance risk and potential legislative bans as well. That is why people are avoiding it as well. And irreversibility. So you see the cryptocurrency transfers are permanent. If you accidentally send fund to an incorrect address or lose your private cryptographic keys, your funds are gone forever. So there is no centralized customer support hotline or any chargeback protection mechanism to save you in this kind of thing. So this was an overview of how cryptocurrency is, right? And next we'll talk about digital token based EPS. So in simple term, tokenization, okay, tokenization is an advanced security framework where consumer sensitive data, like I told you 16 digit credit card number, it is completely replaced by a unique non sensitive mathematical identifier called token. This is what tokenization is, encrypting the data. Okay, so the core objective over here is to guarantee that your actual card number never travels over a public internet or ever sits vulnerable in your merchant's local database. So let's see what happens, how the exact 4-step life cycle of tokenization happens. So very first step is the core data token generation. Okay, so the very first step is token generation. When you first add your payment card to the smart wallet, the wallet application sends a secure request to your card issuance bank to generate a digital token profile. All right, now your profile is created, and then there is a vault mapping. So the banking network takes the real card number, stores it inside a highly secured offline database called token vault, and then maps it completely to different randomized 16 digit token proxy, like I told you, using that VPA, right? And then there is translation. So when you click checkout on a store like Electro Hub, only that randomized token proxy is transmitted across the web to the seller. Your proxy would be used. So the seller never sees your real card details ever. He or she is only able to see that proxy, that tokenization, which is used as your actual identification that you have made payment. And then there is de-tokenization. So the merchant payment gateway passes the token back to the banking network vault. Now how will the bank verify? The bank verify the mapping and swap the token back for your real account number behind their firewalls. Okay, so once the token is received by the banking network, it then translates it and takes out your real number, and then checks if the funds are authorized or not. If the funds are authorized, then it fires a clean success notification back to the store. The beauty of the system lies in its non-sensitivity. Okay, this is how the thing works. And if we talk about core feature, the first thing is the beauty of the system lies in its non-sensitivity. Okay, and in its domain restriction, I can say. So a token generated, for example, for an Amazon transaction is completely useless if stolen by hackers, if your token is stolen, because that specific token is logged and can only be used on an Amazon platform. So it is often tightly bound to your specific physical smartphone device, rendering leaked data completely inert on a hacker's machine. So it becomes so difficult for hackers to even find out what that is. It is basically useless for them, right? So you see, this is a core feature of token based EPS. Then you see device binding. So tokens are restricted to specific device. So if the token is leaked, it won't work on different phone. And there is dynamic security, right? For you see, some system use dynamic tokens that exchange for every single transaction, and this makes virtually impossible for hackers to actually replicate them or use it somewhere else, because it is regenerated again and again after every single transaction or after few transaction limit. There might be a scenario where the token is changed. So this makes it very efficient method for data to securely reach the network and securely payment are processed without any problem or without any attacks happening on the data. And that team brings us to an absolute end of Unit 3 and the completion of our Master E-Commerce One-Shot Exam Guide. High fives to all around who stayed focused until the very end. So I want you to go back over your notes once, pause this video and try to practice all these questions again on your own and take a break as well. All right, and if this masterclass help you clear up the technical concepts for you, make sure to drop a comment below, hit that thumbs up button and share this video with your classmates. Right, thank you for learning with us today. Stay sharp, study smart, and we'll see you in the next high impact video on Padhai Logic. Good luck with your exams. Bye.